Absolutely. Howard Hughes Holdings, we are a company that builds small cities or large-scale master plan communities where we play SimCity. We put in the roads, the hospitals, the police, the fire. We sell residential acres to home builders. Those home builders build homes, welcome residents. Those residents come in, they need commercial amenities. So we build those, retail, office, multifamily, industrial, storage, shopping, etc., to make our communities better. The more that we improve our communities, the more residents that want to live there, and our land values continue to go up and up in a virtuous cycle of value creation. Today, we are in 8 communities across 6.8 million square feet of office, 2.5 million square feet of retail, about 5,800 multifamily units, and 27 condo units that we built and sold in Hawaii. So 13 years ago, we were spun out from General Growth Properties, or from the bankrupt General Growth Properties, I should say. So as General Growth hit the financial crisis and were unable to refinance their debt maturities and went into bankruptcy, Bill Ackman from Pershing Square became one of the controlling shareholders and really took control of General Growth. As he looked at that mall company, he found these master plan community assets that were inside the shell of a public mall REIT that didn't belong. As a result, he decided to spin it out from General Growth and put Howard Hughes into its own publicly traded company where it could focus squarely on developing these large-scale master plan communities across the country. What's really impacted our company and this sector of community building and land development has been the migratory patterns of residents across our country. What we've seen is folks leaving higher cost, higher tax, occasionally those areas with higher crime or social unrest, and migrating to where it's less expensive, warmer, business-friendly, low-tax areas. Those have been areas like the Woodlands and Bridgeland outside of Houston, areas like Teravalis here in Phoenix, areas like Summerlin outside of Las Vegas. As those employees have migrated and people have left to chasing quality of life, chasing better education for their children, parks, trails, access to nature, what we've now seen is companies chasing those well-educated employees and looking to either move their headquarters or take a hub and spoke approach where they can create an office location within our community. Really focus at the end of the day on the overall economic health and the economic strength of our country as a whole. Because if business is growing, if people are looking to buy homes and there's household formation, our business has been very resilient. And we've seen this even in challenging times like we are today. In the office sector, our properties continue to outperform because of those migratory patterns I mentioned earlier, and that flight to quality of life. At the end of the day, if we go into a recession or even worse, that causes me concern. It causes me to worry because then we'll see less household formation. We'll see less business expansion. We'll see a retrenching back into your own market. People tend not to move into these new locations in times of economic uncertainty. Well, I think what sets us apart is a couple of our unique competitive advantages. One, the more we amenitize our communities, the more our land is worth. And I mentioned earlier that virtuous cycle of value creation goes on and on for decades, is very unique to Howard Hughes. And two, unlike almost any other public real estate company, we're entirely self-funded. We're spending $1 billion to $1.5 billion a year starting new development projects coming out of the ground at outsized risk-adjusted returns to our shareholders. And we're doing that without ever raising equity or diluting our shareholders. We're using the free cash flow from our NOI and rental streams, the free cash flow from selling land to home builders, and the profitability of selling condominiums in Hawaii, covering our overhead and interest, and what's left over is our equity that goes into these incredible development projects that create value for our shareholders.